The stock that's a better bet than Bitcoin. What if I told you that some of the smartest investors out there are happily lining up to pay almost $2 for every $1 worth of Bitcoin? Sounds crazy, right? Like a financial puzzle that just doesn't add up. But it's happening right now with a public company that has become one of the most talked about, most controversial, and potentially most lucrative plays in the entire market. This isn't a mistake, it's not a glitch. It's a deliberate, high-stakes strategy. The company was called MicroStrategy, but it recently rebranded to just Strategy, which tells you everything you need to know about its focus. The massive premium investors pay for its stock isn't a sign of madness. It's the ticket price to what could be the ultimate leveraged bet on crypto. For years, Wall Street vets have been arguing about it. Some call it complete financial gibberish, while others see a masterclass in financial engineering. The truth is, this company has built a financial machine, a crypto reactor, designed to do one thing: turn a rising Bitcoin price into explosive returns for shareholders, in a way that just holding Bitcoin itself never could. But how does it work? And what are the risks of this high-wire act? Let's break it down. On the surface, Strategy seems pretty simple. It's a company that, led by its evangelist executive chairman Michael Saylor, decided to go all in on Bitcoin. It started back in August 2020, worried about inflation and the debasing of currency, and began swapping its cash reserves for BTC. But it didn't stop there. It just kept buying. As of mid-June 2025, Strategy holds a jaw-dropping 592,100 bitcoins. That's more than 2.8% of all the Bitcoin that will ever exist, a hoard worth over $63 billion. The company has completely transformed itself from a modest software firm into the world's largest corporate holder of Bitcoin. Its original software business is still chugging along, but it's now just a footnote. For all intents and purposes, Strategy is Bitcoin. But here's where it gets weird. If the company's main asset is its giant pile of Bitcoin, you'd think its stock market valuation would be pretty close to the value of that Bitcoin. It's not even a little. For most of its recent history, Strategy's stock, MSTR, has traded at a wild premium to its net asset value, or NAV. At times this premium has shot up to 2.7 times the value of the Bitcoin it holds. More recently it has floated around a 1.7x to 2x premium. This means investors are willingly paying 70%, 100%, or even more for the stock than they would if they just bought Bitcoin directly. This is the puzzle that has stumped so many people. Why would anyone pay such an insane markup? Why buy the wrapper for double the price when you can own the candy bar for much cheaper? It's a question that has led big-name short sellers to bet against the company, calling it an obvious bubble waiting to pop. They say it's just hype and speculation, but the premium sticks around, which suggests there's something deeper going on that a lot of people are missing. Before we solve that puzzle, you have to understand the risks, because they are enormous. This strategy of piling into a single volatile asset is not for the faint of heart. The very thing that could lead to huge gains is a terrifying double-edged sword. The company's entire fate is shackled to the price of Bitcoin. Its stock is even more volatile than Bitcoin itself. When Bitcoin has seen massive 80% drops in bear markets, Strategy's stock has historically plunged closer to 90%. So how did it afford all this Bitcoin? Not just with its own cash, but with debt. A lot of debt. Since 2020, Strategy has aggressively raised billions through a complex mix of convertible notes and other debt to fund its Bitcoin shopping spree. Michael Saylor calls this intelligent leverage, used to gobble up a dominant digital asset. But leverage magnifies everything. It pumps up gains in a bull market, but it absolutely crushes you with losses in a bear market. The company has real bills to pay, like interest on its debt, no matter what Bitcoin's price is doing. A long and brutal crypto winter could put immense pressure on its finances. It could get cut off from raising more cash, or even be forced to sell its Bitcoin at the worst possible time just to keep the lights on. This creates a terrifying feedback loop. Bitcoin's price falls, their assets are worth less, the stock premium shrinks, their ability to raise money evaporates, and investor confidence shatters, sending the stock into a death spiral. This is the nightmare scenario the skeptics point to. They see a company that ditched its core business for a massive, leveraged gamble on a wild asset. From their point of view, the investors paying a huge premium are just ignoring all the flashing red lights. So the question becomes even more urgent. What could possibly justify this level of risk and this crazy premium? Are these investors just gamblers, or did they find a cheat code? The answer, and the first part of the cheat code, is that one word, leverage. But it's not just any leverage, it's how strategy has turned its entire corporate structure into a machine for amplifying Bitcoin's upside. Michael Saylor argues that anyone seeing the company as just a bucket holding Bitcoin is missing the point. It's an operating company that can tap the capital markets in a way you and I can't. Here's how the magic works. When you buy Bitcoin, your return is 1-to-1. If Bitcoin doubles, your money doubles. Simple. But strategy doesn't just use its own money, it borrows money, often at super low interest rates through things like convertible notes, to buy even more Bitcoin. Let's imagine the company has $100 million. Instead of just buying $100 million of Bitcoin, it issues $100 million in low-interest debt, and uses the whole $200 million to buy Bitcoin. Now if Bitcoin doubles, that $200 million in BTC becomes worth $400 million. After paying back the $100 million loan, the company has $300 million left. Its initial $100 million didn't just double, it tripled. That's the raw power of leverage, and it's built to make the stock outperform Bitcoin in a bull run. This isn't a hypothetical, it's their entire playbook. The company has skillfully raised billions, often with convertible notes that pay almost zero interest, and funneled that cash into buying more BTC. Investors in those notes are cool with no interest, because they get the option to convert that debt into MSTR stock later, giving them a piece of the upside. For strategy, it's a source of incredibly cheap capital to keep feeding its Bitcoin accumulation engine. The second part of the cheat code is even more clever, and it's the direct reason for that stock premium. Strategy has created a self-fueling flywheel that uses its own expensive stock to buy more Bitcoin, which in turn helps keep the stock price high. Here's the breakdown. Because the stock, MSTR, trades at a big premium to the Bitcoin it holds, the company can issue new shares at that inflated price. Normally, issuing stock dilutes existing shareholders and makes the price fall. But here, something amazing happens. They take the cash from selling their expensive stock and use it to buy Bitcoin at its actual lower market price. A report from Token Insight laid out a great example. Imagine one share of MSTR is backed by 1 BTC, but, thanks to the premium, it trades at a price equal to 2.7 BTC. The company can issue one new share and collect cash worth 2.7 BTC. It then uses that cash to go out and buy 2.7 actual Bitcoins. So now the company has 2 shares out there, but it holds a total of 3.7 BTC, the original one plus the new 2.7. The amount of Bitcoin asterisk per share asterisk just jumped from 1 to 1.85. This is a rare situation where issuing new stock actually makes existing shareholders richer on a Bitcoin per share basis. This is the flywheel. A high stock premium lets them raise cash to buy more Bitcoin, which increases the Bitcoin per share, which boosts investor confidence and helps keep the premium alive. It's a brilliant piece of financial engineering that turns market hype into cold, hard digital assets on the balance sheet. In the first quarter of 2025 alone, the company used a massive stock offering to add over 300,000 BTC to its treasury, while its share price jumped 50%. The big picture, a bet on vision and access. Beyond all the financial mechanics, investors are also buying into something you can't put on a balance sheet: a vision, a brand, and easy access. Michael Saylor has masterfully positioned Strategy not just as a company holding Bitcoin but as the Bitcoin treasury company. His rock-solid conviction and constant media presence have built a powerful story that attracts a loyal army of investors. For a lot of big funds and institutional players, buying MSTR is simply the easiest, most regulated way to get leveraged exposure to Bitcoin. They can do it through a normal brokerage account and don't have to deal with the headaches of crypto wallets, custody, or sketchy exchanges. MSTR is a NASDAQ-listed stock, offering financial transparency that you just don't get from holding crypto directly. The company even adopted fair value accounting rules in 2025, which makes its financial statements much clearer by allowing it to report unrealized gains on its Bitcoin. Investors aren't just paying for the Bitcoin, they're paying for a team that has proven it can raise billions and strategically stack SATs. They're betting that Saylor's crew can keep the flywheel spinning and keep growing the amount of Bitcoin per share. This strategy has already inspired over 70 other public companies to start their own Bitcoin treasuries, cementing Strategy's role as a pioneer. That premium, then, is the price you pay for the whole package: the leverage, the smart capital raising, the institutional-grade access, and the visionary leader at the helm. So, when you put all the pieces together, is the premium on Strategy's stock a sign of genius or a sign of madness? Is it a finely tuned financial engine or a speculative bubble about to burst? The answer probably depends on how much you believe in Bitcoin itself. Let me know what you think in the comments. Is this the ultimate crypto play, or just a reckless gamble? And if you got any value out of this deep dive, do me a solid and hit that like button and subscribe for more breakdowns of the market's biggest stories. Strategy is so much more than just a company holding Bitcoin. It's a bold, high-conviction bet that has been engineered into a sophisticated, leveraged machine for crypto exposure. The puzzle of its stock premium isn't a market mistake, it's the price investors are willing to pay for a very unique deal. They're paying for the supercharged returns that intelligent leverage can deliver in a bull market. They're paying for the genius of a capital-raising flywheel that grows the company's main asset without watering down its value per share. And they're paying for dead simple, regulated access to a strategy run by the most passionate Bitcoin believer in the corporate world. But calling it a better bet than Bitcoin comes with a giant asterisk. It is absolutely positively not a safer bet. The same leverage that creates explosive upside also creates the risk of catastrophic losses. The stock is built to amplify Bitcoin's moves in both directions, but for investors who believe Bitcoin is going to be worth a whole lot more in the future, and who are willing to stomach extreme volatility for a shot at magnified returns, Strategy has built a one-of-a-kind machine to deliver just that. It's not just a proxy for Bitcoin, it's Bitcoin with a turbocharger.